YouTube? What's going on? It's Today the CEO, and today I'm going to be doing a simple trade recap of today's trades, where I ended up taking, what I liked, what I didn't like. I'm going to show you guys a few mistakes that I actually made today while I was scalping and how we can fix those errors for the next trade. So, we were looking at SPY today, obviously pushing upside. We had this on the hourly chart. SPY is kind of still moving sideways from this 420 to 440 range. No defined breaks. We keep rejecting this 442 area slash 441 area and falling heavily after that. So this is kind of like the third touch. So we'll kind of try to see if we see some direction. We also see the 200-day simple moving average right here, so we can see if we push back up. If not, and we push back below this 425, we can definitely see some continuation down to 420s, 415s, 410s, so on and so forth. So for the open today, we obviously had kind of a direct push to the upside, no really defined levels. Could have played this 439 retest break, and it just wasn't really defined and didn't fit my trading style. I was waiting for some sideways consolidation, which we ended up seeing SPY hold this 439 level. Just referring to SPY, usually I'm looking at ES, so like the 4400s in there, and on SPY that would be right here. We're looking at 440. So we see that we had this heavy incline push up, kind of consolidated sideways in this 441 range, and then pushed back down to the 439s, which were holding pretty well. Now, as we push up higher and higher, we're looking for this push above this 442 and confirmation close above for some heavy momentum. Now, it could have been because SPY was a bit overbought, a bit overextended is a better word to say on the daily chart, and that's why we rejected and fell. But I ended up taking my first position on SPY once we rejected this 440.5 level and headed back down to this 440 level. Now, first mistake with this trade is analyzing the risk to reward. Now, looking at the risk to reward, I'm obviously playing a break of high of day is what I'm aiming for, looking for a break into those 442s, into the continuation to 443, 444, etc. We have our PTs right here, even 445, but the downside risk really wasn't, the best, as we've seen this gap candle right here, and the risk reward wasn't sitting well. As I entered this trade, I kind of realized that my stop was below this 440 level, but I ended up taking this as we've seen a lot of buyers and bids on the tape. So here was my first entry around 705, 706, and I ended up taking the 442 calls, if I'm not mistaken. And yeah, we were playing the upside, pushed sideways right here. The price action got really choppy. Now, you have to pay attention to this because is SPY making lower highs? We have these highs right here. If SPY fails to hold, we could be making lower highs, which could start a downtrend, ending up in a sell-off for the day, which, the market had just kind of opened first 30-minute candle in, and it's very important to stay cautious, especially when trading 0-day to expiration contracts. So we ended up pushing a bit back up right here, and I got out of the trade with about a 0.3 R. So the risk to reward on this trade wasn't the best. I'm risking a negative 1 R, and I had the 0.3 R. We were trying to see this continuation, but remember, even though we've seen it, not every trade is going to continue. So it's important to make sure you secure. Came out profitable on the trade, just not the best risk to reward multiple, and something that I wouldn't want to trade again. So on the next trade, we had a break above high of day. This high of day break, I ended up taking this reject again of high of day into the moving average because there was bids once again. What I'm doing again is kind of repeating the same ideology behind this first trade, except getting in here on the reject so that I'm able to catch the IV push with these contracts. If we push into high and break above high of day into the 442s and continue from there, that's my risk to reward. Once again, stopping out of this trade below the 440.5 level now, as we ended up entering on this reject. Saw a great candle move right here. We saw a heavy push up. The problem is a lot of ask size started to come in as we're nearing this key rejection level on the hourly chart, and that's why it ended up rejecting and falling, which, ended up getting out of this trade profitable. But once again, the risk to reward on this trade, in my eyes, was much better than the first trade. Now, once price action gets a bit choppier, it's better to just, walk away. And to be honest, I should have probably sat cash until later on in the day, but I ended up taking these two trades in the early morning. The probability on this trade, kind of disappointed I took it, but we had these 443s, 444s, and I ended up just taking the trade in another this one was about a 0.4 R, this was a 0.3 R, so not the best R multiple, still green for the day on these, and I ended up walking away from the market at that point, and then I came back as SPY began to sell off, and this was kind of the savior for the day, giving us a big push. So let me just pull up these contracts on my phone to give you guys better understanding. So I ended up signaling to the Discord that we're watching SPY break of low of day, as well as SHOP to break yesterday's low of day. And at that level, I was going to be taking puts. So we obviously seen this kind of test and breakdown of this 851 level. We saw some sideways consolidation, and as we pushed back up into this moving average, I ended up taking my position here, not the 858 exact level, it was around the 856 level, and I ended up getting in that reject, which we ended up pushing. Now my confirmation is a close below these two candlesticks and a hold below this moving average as well, and that was going to be the confirmation to our trade. So the risk to reward on this trade is stopping out at around the 850, 860 level, more of a psych level, and I was, looking for a break to low of day momentum to the downside into PTs 842, 835, 826, etc. Ended up taking that trade, and we're catching great IV moves just because we're not taking this downside break. A lot of people are taking these actual heavy breaks where the IV shoots up on the contracts. If we're getting in as it pushes up, consolidates, and then we calculate our risk to reward, take it there, the IV is lower, and you'll catch that move with the IV2 on the contract. So ended up taking my position here, broke down, and then just fell into the PTs, ended up exiting some around 842 and then the others around 838, and that trade had three different I was playing 780 puts, 800 puts, and the 850 puts. Obviously I added a bit on the way down as we confirmed that break, and this was a 4.8 R on the 780 puts, 3.4 R on the 800 puts, and 1.7 R on the 850 puts. So the equity, percentage return was great on this trade and definitely made up for the SPY trade. And, that's why I always say, if you keep your risk management tight, stay true to your trading plan, you'll come out profitable and you'll be more calm while trading. It's very important to stick to your plan so that way, if you make a mistake, you don't burn through the past 3 profitable trades, past 4 profitable trades. If you sit in the trade with no plan, that's how you end up burning your account. So with that being said, those are the 3 main trades. Shopify Savior in the chat. And yeah, that was it for today. I hope you guys had a great trading day, and I'll see you guys tomorrow. Bless up.